All right, very quick recap of the markets. Not only Friday, which I haven't done a video for, but also we're going to take a look at the weekly candles a little bit. So, SPY, Friday was a horrible day. For me, it was quite beautiful. I'm bearish, so obviously seeing this massive drop, beautiful. So, minus 1.63% on the SPY, great stuff. Now we're out of this sort of sideways chop zone. I mean, you can say it was almost guaranteed after Thursday's close below the sort of range. But I mean, look at that now, straight into that gap. We touched the gap also. So as usual, gaps always sort of work, especially for day trading. You can always bounce off the close of the gap. But to me, we're going lower next week. I really do not see anything getting in the way of just a resumption of the move down and to new lows. I've been saying this for a while, even whilst we're going all the way up here. And this move surprised me. So let's see Monday. I mean, we've had, what is that, four trading days, just red candles. Obviously, you can have more than that, but it's a pretty significant move down from the high, which I nicely called just after CPI on the market open on Tuesday. So I see it's actually going down here next week. We'll bounce. We may even have a bit of a green day on Monday. The markets did bounce a little bit towards the close on Friday, so I think we could have a bit of a green day, maybe even on Monday. But really, Tuesday, Wednesday, Thursday, Friday, moving lower. I haven't actually checked the news. I'm sure there's news every week, But bar some very big surprise, we're just going to go all the way down to 370 basically on the SPY. That's my take very briefly. So Friday, horrible. Next week will continue to be horrible. Let's look at the Nasdaq, which did not move down as much as the S&P for once. That also, I can't really call this a gap, but it is, and it bounced off it. Now, for me, the next support for the Nasdaq is actually closer than for the SPY. So maybe that's also why I saw a bit of strength. I know Tesla was green, maybe one of the only green stocks, which may have helped the Nasdaq. But yeah, I see the Nasdaq going to this area here. So let's call it 268. We can undershoot, of course, but that's the ascending line. Now for the SPY, it was a lot more steeper, so we lost that obviously, which is why I've highlighted this area as identified support. But yeah, for the Nasdaq, I see it basically as 2.68. So let's just take a look at the percentages. So I'm going to take from the close, right, not the low of days. So minus 3.5% to get there from current price, current close on Friday, which can be done in one day, as we know. And for the Nasdaq from the close, it's minus two, not even 2.5. But both is possible in one day, or definitely in a week, especially if you have a green day on Monday. But who knows, the Nasdaq could resume being weaker than the SPY, and it could easily get down here. It could easily. I mean, yeah, in one day it could touch here. I do think this will act as support. It's just, in a whole week's worth of trading, if we have some volatility and some strong moves down, definitely we're not going to hold this. And then I see 260 on the Nasdaq. Let's look at the Dow. Very close, by the way, the Nasdaq to reaching its all-time lows and flushing. When I say all-time lows, I mean local lows, obviously. The Dow obviously been very strong, right? And here it's touched and bounced off its descending line that it broke out of. Very strategic, very important, very credible. So that makes sense that it held. It also bounced quite well from that, but I see it moving down, yeah, where we are. So about here next week. So let's call it 32,000, nice round number. We could even go below, but I'm gonna say 32,000, stick to the nice number. That's where I see us going to, at least, as long as the markets move down. It's a long way down for the Dow, and it has a lot to catch up with the other markets if all markets move lower. So I'm just going to stick to this for now. Let's see how much of a percentage move that is. Yeah, 2.5%, 3%, 3%. It could even get to this area, 31,750, this little candle here. But yeah, let's just say 31,800, 32,000, basically where this target is. I think that's correct. That's where I see the Dow heading next week. Again, it could do it in one crazy day, but I think next week that will be a sort of, a conservative range to aim for. The Russell 2000, bit like the Nasdaq, it's lost. Okay, like the SPY, it's lost its ascending support, but very weak like the Nasdaq, very close to its all-time lows down here, like the Nasdaq. So I see it going to 168, as you can see. Let's see how far away that is from the close. It was close was up there. 3.75% move. Definitely doable next week. I don't think it'll go to its all-time lows next week, no matter what happens. Actually, that's asking a bit too much. So that's what I see happening next week. The VIX, I always look at also with the general market. That should already be at 26, to be honest. I see it getting to 26 finally. It's a broken indicator to me. 15, 16% doable in one crazy day, but otherwise doable in 1 week. So I see it's getting back up here, 26 on the VIX. We'll move very quickly to interest rates. So here's something interesting happening. The 1 year, 2 year is actually weaker than the longer dated bonds. So that's a reversal of the trend, let's say. I thought the 1 year would break out. I don't think necessarily that has changed. That thesis remains in play. It's just it's gonna take maybe the 30 or the longer range ones to break out. So this time I'll start with the 30 years. So I think 30 year needs to take out 3.6 and run up. And if we see that, we'll see the rest of the curve move up also. The 10 year needs to break out of its downtrend. So, and then once it breaks out downtrend, you really want to see it take out 3.6 something, 3.63, let's say, which could easily happen if the 30 year takes out 3.6. The 5 year needs to also take out 3.8, this range here where the target is. And that will probably also equate to a nice breakout of a downtrend. We're almost there, yeah. So we need to really take out 3.8 on the 5 year. The 5 year for me is actually the least relevant, but it's actually a very nice chart. And then the all-important 2 year can start to take out this descending line and really close above it and hopefully close above 4.4. Then you've really got almost guaranteed move all the way back to new highs. This will probably coincide with a nice move down in the markets. The 1 year, though, bit surprising that it closed red, but not by much, right? And it still hasn't taken out this chop up here, this neckline, if I can call it that. Really, we'll just want to see it close above 4.8 and then, scream higher. So I still think rates go up. I still think markets go down. I still think the dollar goes up from 103. I've said that. I said it when it looked horrible. Now it looks a bit better. This bit like the yields, it needs to take out its descending line and just go back up. I am bearish fundamentally the dollar. I am bearish long term fundamentally the dollar, but I've been saying that the dollar can move up short term, even though it's fundamentally flawed, like all currencies, all fiat currencies. But it's the least dirty t-shirt, whatever you want to call it. They all have their own little symbols and all that. But yeah, I think we go up, break out of this descending line, and then we test the old highs. And I actually think we'll fail, flop, and flush all the way down. And that's when you really see commodities just go up against everything, and currencies will just lose against all tangible hard assets, commodities, for example. So, but I still think the dollar could break out of this with rates, and you could see, therefore, commodities move lower. And I think everything will move lower. I think we're going to go back to the old trend where volatility goes up, interest rates go up, dollar goes up, every single thing else goes down. So yeah, I'm still looking for that breakout. Let's call it 106. So once we take this out and close above it, and then really close above 106, for me, that's it. Then we're going to test 108. Then we'll test the old sort of this range, 10, let's call it. That's a nice number. And then 113, and then we're all the way up, testing new highs, maybe failing. I do think we'll fail. If we don't fail, by the way, let's just remember, let's go to the weekly. We have that old high of 120. We'll never get up here, by the way, never. So we could sort of bounce, go here, fail, flush. But if we do take it out, we go to 120, and then we'll come all the way back down. And then there's a new world to adapt to where all currencies are just trash. So just short term, a bit bullish, let's say, the dollar. That's it. I'll just finish very quickly on gold. Why not? So with the dollar and rates going up, it's interesting that gold and silver have been very resilient. So look at this nice bounce we had on Friday, right? Everything was trashed on Friday, but gold and silver were not. I mean, gold was almost testing 1800. I know it came down quite a lot, but still, that's it's still flagging all the way up here. So gold was quite impressive, which worries me because I sold a lot of my gold and silver stocks. I do not want it to all of a sudden test old highs whilst the market goes down, and then as soon as the market bounces, gold goes all the way up to new highs, and then I've got to chase after, basically buy back what I sold higher. So that would be not so good. So gold, I still think, sideways down. I think you can see that that is possible. So we sort of sideways and then test this and then down back to this target and then a nice bounce. And then I really do hope it flushes. I don't know if it'll flush this zone because it's moved up quite a lot. I don't think it'll go all the way back down. But if the market starts to tumble, as I think it will, after 1, 2, 3 weeks, even into January, into February, even, then you could get gold and silver all the way back down to their lows, with the miners also all the way back down to lows, maybe even to new lows. What a massive buy. Everyone will know it. Everyone who knows a little bit about the sector will know it. But everyone will be buying. So I'll be buying earlier than I even anticipate. So this is what I think. I think we could have gold test and hopefully fail 1800 one final time, move back down and just go back to this zone here that I've marked already. Call it 1740. I really do hope that happens. Silver, for example, very strong. Look at that hammer, beautiful. It really was weak early Friday. I think it was down 2.5% at some point, and then it closes green. That's so bullish, so incredible. Didn't like to see that. So I'm hoping also for, well, I don't even want it to go up at all, but maybe go up a little bit, test the old highs and just take out that Friday low. Down we go here. Maybe even then, to be honest, the strength it's had, it would probably take a few days to get down there. And if it does, then by the time we get down there, this ascending support, which is the reason I have this target here, could move higher and higher. So if it does even flush this zone, let's call it 2050, right? It'll probably only go to just under 20 and bounce. So I might end up buying it a lot higher than I think because I'll still be buying the same zone, which is the ascending support. So, maybe I need to start considering the time element a bit more. But silver, what a massive, but even more of a buy than gold. I've already emphasized gold enough. So that's what I think. And finally, let's look at the miners. The miners, mind you, gold and silver green. The market was red. The miners are up higher than the metals themselves. Very strong indication after looking very weak. Because look, Thursday it closed at low of day. It was almost guaranteed to come down to this target. And this was where I was going to start my first buys. Even though I think the market's going much lower, I know that the miners are a buy. And I don't want to start getting greedy on the way down either. So I was actually ready to buy on Friday a little bit, nibbling in a little bit, way too early, knowing that my buys would be underwater. And lo and behold, they were I didn't even get any buys. I was nowhere near buys. I mean, had to go down, I don't know how much percent there to get to my buy zone, but 4%, that's quite a big move down, 4.5%. And in the end, it goes green, 1% and 2%. So very strong. Again, I am hoping for the sort of cascade mentality where all markets go down and gold and silver and the miners go down. I'm looking for those kind of crazy days where everything is sold. So I don't think it's going to happen necessarily next week. And with Christmas around the corner, there'll be low volume trading. You could even get the markets going green a few weeks, a little bit, with light volume, it happens. So you have this Santa Claus rally. It is possible. But with what's going on, I wouldn't be surprised if a lot of people are trading and the volume is higher than normal. So anyway, I just feel like up a little bit, then down here, which I'll be buying, and then down there. And then we'll see. I'll be buying that. I'll be buying both zones, obviously, as marked here and here. You could have a period where the miners just totally disconnect from the markets. And if markets go down, miners go up, Don't discount that. That's happened before. In fact, that happened when the Russian war kicked off. So I don't want to get greedy and just hope for even lower price. I've got a lot on the sidelines. I've sold this move up, so I don't like to see it go and test all highs, and I'd really hate it to go higher, even if I make money. I'll leave it there. I'm going to make shorter videos now, so I might make a new video immediately after this, but let me know what you think. That's what I'm thinking immediately short term next week. Otherwise, good luck trading.